BOI, what you need to know to avoid costly mistakes. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. Welcome to another episode of Adam Talks. Today's podcast, that three-letter ugly word, BOI. And you basically have to file it. I'm going to go through in this podcast who needs to file it and keep it like 5 minutes. Penalties could be up to $10,000, potentially even 2 years in jail. The government is not messing around. Yes, I do agree with all of you. They are overstepping. There has been a court case in Alabama, National Small Business United versus Yellen. And this court actually agreed with us and said, yes, the government did overstep. The problem is this decision only applies to a very limited number of businesses as part of the National Small Business Association, about 65,000 businesses. It doesn't apply to me, probably not to you. We all have to do this by the end of 24. So if you have an entity or you have substantial control of, which means you could just be a manager, an executive, a CEO, CFO, president, even a board member, and you have some control, the entity needs to file a BOI, beneficial ownership interest report, under the Corporate Transparency Act with FinCEN. Okay, and that's the government. Who owns these companies? Who are the people behind these companies? Their claim and their goal is to prevent money laundering, terrorism, which we all agree with. The problem is, I'm not sure that this is going to help, right? And I've talked about this in previous podcasts, blogs, videos. If you want to circumvent these rules, it's pretty easy to. Why? Because companies with more than 5 million or 20 employees and 20 employees don't have to file. Okay, trusts don't have to file. So if you're going, charities don't have to file. So if you're looking to do money laundering or do bad things, you can easily set up a charity and donate money overseas to bad actors. It's not foolproof and it seems arbitrary, and surprised Supreme Court hasn't come down and just shut this down. Seems like a government overreach, but that's where we stand today. So we have to comply with it. And basically, as I mentioned, it's not super difficult. We do it for all our clients. Now, who has to file it in the IRA 401k world? So if you have a self-directed IRA or a solo 401k, and that retirement account invests directly into the investment, so it buys stocks directly, it buys real estate directly, it buys private business stock directly, it buys gold directly, Bitcoin directly, you do not need to file the BOI. I'm going to repeat that. You do not need to file the BOI. But if your IRA or solo 401k invests in an LLC, like a checkbook control structure, or you do a ROBS where your 401k owns a corporation, the entity, not the IRA or 401k, but the entity needs to file the BOI. Why? Because it needs to show and needs to disclose who the owners are. And yes, the owners are retirement accounts. You should say, well, good, Adam, I'm exempt. The retirement account is an owner. So why are you saying I have to file it? This is why. Remember, there's two requirements to filing the BOI. There's 25% ownership. There's also substantial control. So if you are the manager of your IRA LLC, which you're probably going to be since it's your IRA money, or you're the president of the corporation for your rollover business startup where your 401k owns it, the BOI needs to be filed and it has to disclose who has substantial control, which is you. So yes, technically the IRA, the 401k as owner is not responsible to file it, but you are as the person that has substantial control. So that's why in the IRA or 401k world, a direct investment is exempt from BOI. Okay, so for most Americans who are having their IRA invest in ETFs or Tesla stock or Google, no problem. Or if the IRA just owns the real estate directly, no BOI. But if you're using a checkbook control structure, which we have thousands of clients that have done so, or have a solo 401k that use the LLC, or have the ROB structure, then there is a BOI filing requirement and must be done by December 31, 2024. It's very important. We do this for our clients. There is a small one-time fee. You don't have to use us if you don't want to. You can try to do it yourself, but we have the expertise. We can do it. We have a FinCEN number, so you don't have to get involved. We'll do it for you and we'll take responsibility for it. But you need to obviously let us know. Now, for all new entities that are established, again, IRA LLCs, 401k LLCs, or if you just start up your own business and you don't satisfy an exemption, 5 million or 20 employees, or you're a tax exempt or a trust, you have 90 days to file the BOI for new companies starting in 24. So for all entities set up before January 1, 2024, so whether it was 23, 21, if you don't satisfy an exemption, you must file the BOI by December 31, 2024. It's crucial to $10,000 in penalties potentially 2 years in jail. The government is not messing around. That's it for today's podcast. I don't want to scare people, but it's crazy. I know. I'm praying every day that the Supreme Court gets this case and will shut it down. But we can't take the chance. We need to file this stuff and make sure we're protected. So thank you. I hope you enjoyed the podcast. If you're listening on Apple or Spotify, thank you. Don't forget to give it a nice review, I hope. Thumbs up. And if you're watching on YouTube, appreciate it. Like it. That's always great. And if you can subscribe to our amazing IRA Financial channel, that's also very good. So have a great day. Thanks for listening and watching. I'll see everyone again next week.